All right, guys, it's important today that we talk about SoFi and the share dilution that we saw following an incredible earnings, and then the market closed with a pretty darn good price, if I do say so myself. And what in the world happened afterwards? We need to see the effects of that. And you might be saying, Tony, Tony, Tony. No, not these guys. Not Tony. But Anthony Noto, the CEO, what's he thinking with that share dilution? Doesn't he care at all about the shareholders for SoFi? And I gotta say, I think that he cares quite a bit, and I still think that he's a grower and a shower. And for a growth company, they need that capital coming in. We're gonna take a look at the numbers for SoFi stock before the share dilution and show what happens after the share dilution to the price that we should expect from this. We'll also talk about some pros and some cons and just generally what it could mean for SoFi. I'll share all of this stuff and more over at the Discord. Links in the description. Come on over and join us. Code word doctor. It does expire soon, so make sure you take advantage of it. Where you can also see my buys and sells along with the other panel experts over there as well, including live sessions for teaching and also some live trading as well. So guys, let's get into the numbers on this thing for SoFi. What exactly does it mean for us when we take a look at these numbers? Well, they have a market cap as of yesterday's close, by the way, of about $24.76 billion. The share price closed yesterday at $22.40. The shares outstanding, according to those two numbers, is about 1.1 billion shares. And then the stock value that they for what they're putting out for that sale comes out to 1.5 billion. The offering price is 20.85 billion, which means an additional shares of about 72 million more shares on top of it. So for percent dilution, that means about 6.5% more shares than there was before, totaling the shares at about 1.17, almost 1.18 billion shares outstanding. So the 2240 that closed at, if that's what they were worth as of yesterday's close, then as of that share dilution comes out to $21.03. And so as I look at the pre-market this morning, we're trading at $20.65. And some of that might be impacted by the market bias that we have. However, are we getting a discount on this? Is there premium in the share price that we're not quite seeing? Well, there is also a clause in there. I believe it's called a green shoe part of it, where the underwriters can choose to buy an additional 15% of shares over the next 30 days, which could show some investor appetite. What that would do for this sale, instead of being a $1.5 billion, it would be $1.725 billion. And that affects the prices as well. So the offering price was for $20.85. That means 82, almost 83 million additional shares, which instead of 6.5, now we're up to 7.5% share dilution, which takes us up to 1.18, almost 1.9 billion shares for SoFi, which then the resulting share price comes out to $24.84, probably 85 cents. I'm guessing that some of that market cap rounding in here, this may have been rounded down a little bit. We'll see for that, but I'm guessing that comes out to pretty much exactly $20.85. So that seems a little bit too much of a coincidence for that price to come out. I'm guessing that this is something that was calculated ahead of time. That would go into that underwriting. Now, mind you, it doesn't have to be that way. It could just be coincidental, but I honestly, I don't know that it is. So that $1.5 billion, being that it's underwritten, means that the underwriters, which Citibank and I think maybe Goldman Sachs, bear the risk for this already. It's their job as the underwriters to sell those shares. The SoFi themselves just gets the cash. Now, whether or not the extra 225 million comes their way depends on investor appetite. If there's outsized demand for those shares, that's where the investor appetite comes in, which could be a very positive thing for SoFi. Now, Anthony Noto, I mentioned about him being a grower and a shower. He's done share dilutions in the past. He'll probably do more coming up as they continue to be a growth company, not a mature company that would do those share buybacks where they would be cash-rich companies that would be returning to shareholders in that way. During that time, this share dilution you could expect to keep on happening. What we want to see is a track record for growth given those dilutions. It's like, all right, well, you devalued our shares all in that one moment, and that sucks. But Anthony, Tony, you better return to us over that time, is what this comes down to. And so we can watch and see maybe people lose some confidence. Honestly, I don't know that it's going to move much further south, at least from this news anyway, from that $20.85. But I do want to share some pros and cons with you just on here, and I may have already mentioned some of them. So investor appetite, especially if we see that they have that demand for that extra 15% of shares purchased, which would take them up to $1.725 billion in cash from that. That could be a very good pro for us. Track record for growth, they absolutely have it, and so far growth has been outpacing dilution, which is also a very good thing for us to see. On the con side of things, we'll probably have some more dilution coming our way, and then there's also the risk to show continued growth on top of that, and it could suggest that maybe the company themselves feels like the valuation's pretty rich, and maybe for right now at least, it's a little bit overvalued. It's been a little bit too far forward looking from right now. Now that's different than a company that does the share buybacks, because then that indicates when they buy those share backs, one of the reasons they could be doing that is that they believe that the company believes that they're getting a discount on those shares as they buy them back, and then it can also increase the earnings per share that are reflected as well, which can also help those companies show growth when they're mature companies. Being that SoFi is still a high growth company that's out there with a track record for growth, we can probably expect this to happen a few more times over the next several years as they continue to mature. And one of the big speculations that we have for SoFi for why they might be doing a capital raise like this, besides the valuation, is, well, they want to get back into the crypto side of things. They want to keep those fees coming into the company. So by taking out something like this, by going for that capital raise, that allows them to have more cash in their coffers in order to continue to run the company. I don't know if you've ever tried to run the business from a cash-starved approach. For example, I have a small business here with what I do, and the first year that I decided to pay for TradingView and get that premium version of it so I could give better offerings and products and services here, I had to dig into my pockets and put out several $100s in order to make that happen. And well, I mean, that kind of stinks for a small business because the cash flow isn't that great. And I think it's the same thing here for SoFi. Now, mind you, I do have a track record of growth myself, and it's nice, and that growth does happen to outpace the expenditures that I have to put out there. So far, I haven't had to take out any debt, which you go me for being a small business and not a publicly traded company like SoFi. I'm not in the business of looking for any sort of acquisition targets or anything like that for myself. But I will say that when you try to run a capital-starved business, that can stagnate or just pinch off growth. And so we have to have faith in Anthony Noto, as given his track record before, being forward-looking here, that he's going to be able to continue to do that. So guys, let's jump into the charts from here to take a look and see how we're positioned following that share dilution announcement that we got. So right now we're looking at SoFi. There we go. And I also have this distracting thing here. Let's take down the technicals for a moment so this is nice and clean for us. So this is what we got yesterday with that high wick that could indicate that further price drop is to come. Now, mind you, maybe some people knew that that share dilution was on its way and that it was coming in, but we also did have evidence that some buyers were waiting a very long time to hit these levels. And as soon as we hit that, we got that big old sell, bringing us back down to this previous peak for the close. Pre-market showing us currently down below the 13-day at $20.73. Now, mind you, we want to pay attention to the background market bias for this and see what exactly could come our way in the near term for this. So it'd be nice to see this, in my opinion, because I'm looking for cheaper shares as an investor in SoFi. I always want to accumulate more because I do believe in their business model, and I do believe in Anthony Noto's ability to return growth to the company. So will we see this back down around 18? If we do, I think that that could be reasonable for myself. You guys are welcome to have your own reasons, your own ideas for that. Ideally, I would like to see a day come where the market is just sad sack and sitting around and crying and feeling sorry for itself. And I would love to see it around 13. And I know people get angry about that because of the holdings that they have, but I don't look at it in terms of the holdings that I have presently and the price that it is. I look at it in where those shares could go in the future. And if I would like to accumulate more, I could DCA at those prices, like where we see it up in the $20 range. But if I could also get a much larger piece or take advantage of a good company at a great price, such as a $13 amount, well, I think that would be incredible. Wouldn't you? Like, just think about it. Like, imagine being upset that there's a pair of Nike shoes that you want that currently cost $125, and then they go on sale. Instead of $125, they're going on sale for $50, and now you're upset about it because you have those Nike shoes. You just bought them, and they were $125 when you paid for them, and now they're on sale. like maybe the shoe example is not the greatest one because, well, we'd have to expect them to appreciate over time. So at appreciating, maybe it's a collector's edition Air Jordan or something like that, that you think that this sale hits, and now you're like, man, this is a bargain because this thing in 3 to 5 years is going to 5 to 10x from where it's at right now. So if that happens to be the case, then you shouldn't necessarily be mad at the discount. Now, mind you, if you're in margin or something like that, and this is something that could continue consider or possibly put you into an area where you could get margin called, that probably wouldn't feel too great. So putting this back up here for us, what are we looking for in the near term for SoFi stock from a technical basis? Well, we have support, which we don't know that we're necessarily going to close below it. Today is important. Are we going to close up above 21 and above the 13-day, which happens to be at about 2107? If we do, that could be a very good thing for us. That could be like, okay, well, then we have that support right around in here. And I know that there's some noise on here. I'll try to reduce it for you. We also have a lot of evidence support from 1835 up to 1908. So finding that big fat area of support, which will also close this gap that we have over here, that could be that wild ride up, especially as we have that 50-day EMA coming up for us. We should watch in the near term with these moving averages and the momentum for what could happen for us. We do currently have some evidence of bearish divergence between SoFi's price and the RSI on a daily basis. And we're currently on a weekly basis, we're overbought. On a monthly basis, we're just barely into overbought territory. So discounted SoFi shares, I'm still going to stick with an unapologetic yes, please. And I'm not concerned right now with where the price is at. And I'm not concerned right now with a price drop because the fundamentals haven't really changed too much, even in the face of the share dilution, because I understand it would be different if we saw it from some mature company where they start to get into cash flow issues and now they need to do this in order to save their company. I don't think that this is a save the company move for SoFi. What I do think it is give SoFi some room to breathe for this and to have those acquisition targets and to build out their business model further from what they've already done. And I do think that they have that vast potential for doing that well, given their track record so far, that they're going to continue to carry that innovation forward and expand their margins, and it's going to return it to us, the shareholders, over time, even though it might take a while for this to mature as a company, maybe even beyond 2030 for that to happen, which means that we could probably see several more dilutions to happen over that time, and we're just going to have to keep on tracking the company's growth and see that they really are continuing to be able to put out these growth type numbers that, yeah, they diluted those shares, but now they're able to have some key acquisition targets or build out some further technology, make some further investments that allow them to expand their revenue, expand their margin, expand to the bottom line, and also to reduce costs could actually be a very good thing as well, that they're able to optimize and really continue to keep things very tight as a company. So guys, you can let me know what you think about this. Are we going to see further drops down to support? I think there's a potential during Q3 here to see that happen, maybe even early Q4. I still think that we're going to have a very bright finish in the markets overall, and I think SoFi is also going to enjoy that ride, but we're going to have to see that as it plays out. This is a critical week for us, and next week should also be a tone-setting one, if you will. We'll see how we finish up with a lot of the big catalysts that we have going on. Guys, I'm going to get going here as the market is about to open for us. You guys can let me know what you think about my presentation here for SoFi, and I still plan to put out numbers, especially with this in mind, for that $100 SoFi stock price target. We'll see if we can hit that in the next 3 to 5 years, and what it will take in order to do that, and especially we'll even factor in some further share dilutions to see what it would take in order to make that happen and see if it's something that can come to reality. Guys, join us over at the Discord, links in the description. Code word doctor expires soon, so make sure that you take care of it. I am just one of the experts over there to help you in your journey towards financial freedom and building alpha in your portfolio. And then there's, like I said, there's a whole team of us who share our news, our insights, our time, our buys, our sells, live trading sessions, live lessons over there as well. A whole library already over there in the Ask the Expert channel. It's an entire ecosystem there dedicated to helping you in this process and navigating the markets. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.